less work to take the less
For global macro, it's a difference. You can't run the same strategy.
40 Act funds are going to cannibalize the hedge funds.
You could get a lot of debate on that one.
Yeah.
I mean,
We're also
I'd be
starting
fun
to
to
talk.
convert.
I don't think it'll necessarily cannibalize.
In 2008, a giant anvil fell on everyone's heads in the form of a stock market crash. And so everybody, investment advisors, investors, went scurrying, trying to find something that would deliver a positive return that didn't look like a stock. And so all of a sudden, mutual funds started cloning hedge fund strategies, offering them to the general public. And so that brings us to the state we are today, this ferment where there are many 40 Act mutual funds that are offering hedge funds.
The 60-40 traditional asset allocation approach, I think, is something that started losing its luster 20 years ago. And sophisticated investors have been looking at more sophisticated ways of doing asset allocation, which has to include alternative investing for at least 20 years.
The asset gathering part of the industry in terms of attracting new clients is going to be increasingly competitive. And with the institutionalization of the industry, where the larger hedge funds are gathering the assets from the institutions, I think the smaller managers will be forced to look at new distribution channels and new sources of capital, which ultimately will be garnered from the retail side of the industry through 40 Act structures and other ways.
There are things that are alternatives that are still of no interest to me. I'm not interested in finding antiques and art. I mean, I'd love to be able to afford them, but not for my clients. And I'm not looking at limited partnerships, or I should say at private equity, because those have too high of a correlation with stocks. They crash at the same time stocks do.
I think you'll see two things. I think you'll see the traditional hedge fund managers moving into more user-friendly structures like 40 Act structures, and I think we'll also see, and we are seeing, traditional managers launching long-short equity and other hedge strategies in trying to access the traditional hedge fund space as well.
Over the next 3 to 12 months, I would expect that the monetary easing and the liquidity that's already been injected will start to create some kind of inflationary flames. There's a lot of gasoline on the briquettes, and it could explode.
You have to remember that alternative investments are not super risky the way people think. People think alternative investments, it's like Bernie Madoff or Paulson or something, it's going to be huge or it's going to blow up. Most of them are not like that. They're kind of boring. They occupy a space in risk roughly between the bond market and the stock market. And if you have a quarter of your portfolio, assuming you understand what you're doing and you know what these things are, then that's a prudent place to be. If you don't understand them, the correct allocation would be 0%.